JBlog, May 15th, 2011. Haven't done a blog in a little while. I have been busy. Starting out by looking at the New York Composite. Definitely have a trend break here. It's not yet a downtrend, but it is certainly not an uptrend anymore, not as steep as it has been for most of this year. We have started going sideways for quite a while here now. Um, so we'll see where that goes. The S&P 500, again, same thing, has been making slightly higher highs on price point of view, but if you look at the RSI, it's definitely not making higher highs on the RSI, so this is a negative divergence right here, which could potentially spell trouble in the future. Volume has also been declining a little bit here, and the OBV is still going up on this. We'll see how long this can hold out. Generally, the Dow Jones Industrial Average looks the strongest. The S&P 500 looks not as strong, and then the smaller indexes definitely don't look as strong as that. If you're going over to the Canadian, the TSX, it has definitely rolled over right here and is currently in a confirmed downtrend. The startings of a downtrend anyways. We've got a double top here, and then you've got one lower high, and we got one even lower high and a lower low and a lower low here. So this is definitely now in a downtrend, and that is the exchange for a country that is actually doing economically much better than the United States. And what does that mean? Simple. Canada does not have a Fed that prints money endlessly and pipes it into Wall Street to maintain that index, which is what we're seeing on the American side here. We're simply seeing money being force-fed down the throats of the markets. It's not showing up in the economy. It's showing up in very select parts of the economy. Big business, military, politically well connected. Not so much for the average person on the road. Core sectors. Let's have a peek at the core sectors. So the S&P 500 has made this higher high, but it has made it on lower volume, and it has made it with a lower RSI. We've got materials. Materials look almost like head and shoulder. Here is the head, there's the shoulders. It's not a very clean head and shoulders. If we looked at this one as a second shoulder, that'd be a possibility. It could spell the high for the commodities for a little while. Not that I think the world will no longer need commodities, simply because I see that too much money went into them, and now they have to refresh themselves, gain new power. Energy, again, there's a technical non-confirmation here. We've got, again, something that looks almost like head and shoulders here, or at least a double top, and we definitely have that on a declining RSI. So even though the price is getting higher, the strength of this rally is running out. And of course we have massive volume on those down days, and we don't have really massive volume on those up days. That shows in the OBV. The TRIX has also turned negative. Financials, very interesting Friday. Friday financials broke an important support line here at 1575, 1582, but it never ended there. So it managed to pull out on Friday. It penetrated this support and actually stayed below. So if on Monday there isn't a rally to get this out, we could see financials drop quite a bit further. Of course, financials are in a down downtrend. And I do have to remind people, this is very important. This is after $10 trillion of spending by the federal government. That is a massive amount, and for banking to tank this badly after all that money has been spent on it, taxpayers' money, virtually bankrupting the United States. This is insanity. This is plain greed. Biggest bank robbery in the history of the world. It is amazing. Um, so OBV has been negative for quite a while here. Um, going further down the line, we've got the industrials. Industrials are still stronger. We've got technology. Technology is putting in lower highs here. We got consumer staples way up. Um, why consumer staples are way up after this long run, I'm not sure. Just because I imagine that's where the money is heading these days. And I will bring all of this together in a second. Utilities, big bounce over the last month and a half here. And then finally, healthcare. Again, a big bounce. So we've got utilities, healthcare, and consumer staples being very strong. That what basically that tells you is that the growth cycle is over, and now we're basically going into a defensive cycle. These are not growth sectors; these are defensive sectors. So unlike most of the press, the market's already understood that the party's over. The Fed is taking away the punch bowl, at least we hope, and we'll get down to just looking at it and saying, hey, this isn't working, and we're basically bankrupt because all of that money that has been borrowed off obviously needs to have interest paid on it, and that goes straight out of taxpayers' pockets. That is an enormous amount of money, and that is an economic drain. Consumer discretionary, still very confusing. I never expected this to be this strong. It too seems to have flattened out a little bit, but is still way stronger than I would have ever expected it to be under the circumstances. But there is actually a news story I will have a look at in a second that will actually talk about that. Um, First thing is there was a survey by Zillow.com on households, and at this point 30% of mortgage holders owe more money than their homes are worth. That of course spells disaster for the housing market. The housing market is by no means recovered or recovering. In fact, there are those who would say that it is once again getting worse. Obviously, the only thing that happened is because of tax advantages, people bought last year, and now they're not buying this year. The Case-Shiller Home Price Index is once again dropping below zero, which means house prices are once again heading down. Zillow is now estimating that the recovery in home prices will not come before 2012. They're not saying that it will come in 2012. They're simply saying it won't come before 2012. Funny article I came across. Ferrari, believe it or not, is now making a hatchback. Yes, believe it or not. It is amazing that a company like Ferrari would make something like that, but I guess baby boomers and eco boomers, in fact, for 230,000 euros and a 1 year waiting list, can now have something that they can put a baby seat in the back and even pack away their groceries. So, yes, nothing is sacred anymore. Another thing I'm coming across is lots of takeovers. I am seeing lots of takeovers of companies taking over other companies. Um, and this is basically once again a sign of a top. Usually at the end of the cycle, lots of businesses try to take over each other. This happened in 2007, 2006. The takeover battles went crazy, and of course, that usually marks the end of the cycle because that means companies are flush with money and they have nothing else to do than to spend it stupidly on each other. In my opinion, destroying huge value for the most part, because most of the times these mergers don't work. That has been my experience. Here's Daimler and Rolls-Royce trying to take over this other company that makes diesel engines. Here's an interesting article I came across. Geithner is, of course, telling Congress that, oh, if you don't raise the debt limit, then it will do irrevocable damage to the economy. Well, that's a BS story. The irrevocable damage to the economy has already been done. There will be a double dip recession, no doubt about it. And basically, Geithner is just playing politics here, saying, oh, if you don't give us that, then this will happen. Well, doesn't that remind you back in 2007 that when people were supposed to vote, Congress was supposed to vote on these measures to bail out the banking sectors, and if they didn't, then unemployment would go above 8%? Well, thank you very much. U6 is now at 17%. So how well did that work last time? Anyways, but yeah, he's playing politics, and later he can say, "Oh, it happened. I told you it would happen." Here's another takeover. The Canadian TSX was supposed to be potentially be taken over by the London Stock Exchange, and that might not happen now because Canadian banks do not want this to happen, so they might be buying it again. Another takeover battle. Um, Interesting story here just about real estate and how if you have borrowed more on your property and the property prices go down suddenly, you can't really sell it anymore. But, you know, should you stay in the house? Should you get out? Should you downsize? Things are being discussed. That's interesting. Here was an interesting article I came across. This joker is all I can say in this case. I don't know, seems outrageous to me, but he's saying that um, Apple could be and should be a $2 trillion company. In fact, he further down actually claims that it could be a $3 trillion company if you give it a P ratio of 90. Uh, there's nothing realistic about a PE ratio of 90. That means that if you invest in the company today and nothing changes, it'll take you 90 years to get your money back. If profits double, if earnings double, then it still takes you 45. If they quadruple, it takes you 22 years. That just doesn't sound like much of an investment to me, personally. I don't know. So, yeah, but these stories again seem to happen mostly at the end of a cycle. Here's an interesting article. China is using more and more of its food uh, commodities, and but it's producing less because a lot of farmland has simply been converted to factories. Uh, Square miles upon square miles have been turned from productive farms, reasonably productive farms, into factories producing stuff. And now China happens to become an importer of food, and 1.3 billion people importing food will continue putting a strain onto world food prices. And that is why I'm not really so worried about the current downturn in commodities. Federal deficit is on track for record this fiscal year. This is actually a slightly older article from February 14th, Valentine's Day. But this once again says that the current deficit is going to be gigantic, and this current set of clowns simply has absolutely no desire to do anything about their free spending ways, and they still think that they can spend their way out of debt. Here's the reason why we continue having consumer discretionary spending way above where it should be, simply because the banks cannot foreclose on a lot of mortgages that have gone sour. So these people continue to live in these houses, not paying any rent, not paying any mortgage payments whatsoever, and they continue having money that they can spend on iPads and iPods and iPhones and everything else. Um, some dire warnings out of some people about a coming crash. Too long. But the other thing I just wanted to look at is um, So been a lot of talk about gold and how, gold had this run up and then suddenly it dropped. If you look at the long-term chart, this was the upper bound, this was the lower bound. It's nowhere close to the lower bound. If you draw this line, straight line, and you follow it, gold really should be at about 1360. So nowhere is gold crashing right now. Even silver went quite parabolic and then came down. But it is still very much in an uptrend. It's still above the 200-day moving average. But the real actor in this particular story is not gold. It is the US dollar. If you look here is the gold price in euro, and the gold price in euro really hasn't dropped. In fact, it is at highs. Because when you look at the US dollar, you will see the US dollar has been going down, 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 and suddenly there's this uptick. And this uptick basically tells us that the market is worried. The market is saying, whoa, the US dollar is now too cheap, and we'd like to spend a bit more on it. And that, of course, sucks the wind out of the bulls. Copper, very ugly chart. Now this, back in 2008, 2009, actually, there's a lot of people that were talking about, oh, copper is the metal with a PhD in economics. All the bulls said, oh, copper is going up, so things must be getting better. Well, I don't see anybody saying now that, oh, things must be getting worse because copper is going down, but copper is going down. It's definitely a downtrend, has been in place for a while, so I suppose we should be worried here. Oil, again, same story. It had this massive run up and now it came down a little bit. It's still way above where it should be. Anyways, that's all I have for today. That's my view of the market, and good luck. Have fun next week. Hope you make lots of money.